In this video, I'm going to teach you the right way to trade chart patterns and candlestick pattern, because there are many traders in the world today who still trade chart patterns and candlestick pattern the wrong way. They still think if market forms a double top pattern, we should build our entry downside. But that's not going to work today because there are many big players in the market now. So we should think about the top 1%. We should think like the top 10% in order to make money in trading. So that's why in this video I'm going to teach you the exact way how big players trade chart patterns and candlestick patterns. So without wasting any time, let's get to the point. So number one pattern is double top pattern. This is also known as the M pattern. This is a bearish chart pattern. According to technical analysis, whenever this pattern forms, we should make our entry downside. But nowadays, this has been changed because there are so many smart players, there are so many operators in the market who notices this. And what they do, they usually forms this pattern because they have the big money, so they can do whatever they want in the market. So they forms this pattern and all the retailers make their entry downside after the neckline breaks. So let me draw the neckline for you guys. This is called the neckline. And whenever this neckline breaks, retailers makes their entry downside and the big players hit their stop loss upside. So how we should trade currently on these patterns? So what you need to do, what we need to do is to identify the previous data. We need to analyze the previous data. So let me give you an example. So if there is a strong resistance or psychological level downside of this pattern, so you are currently trading, let's assume you are currently trading and in this M pattern or double top pattern forms. So there is a strong resistance level downside this pattern and the neckline breaks with very big bullish candle. So what retailers do, they make their enter downside and market touch the resistance and go up. So what we need to do, we need to wait. If there is a strong resistance or psychological level downside the double top pattern, we should make our entry before after touching the resistance. So if price touches the resistance and gives a strong bullish candlestick pattern, we come to next one candlestick pattern. If gives a strong bullish candle, we should make our entry upside, and if price breaks the resistance level and sustains, we should make our entry after retracement. So this is how we should trade on chart pattern on double top pattern today. We need to wait for confirmation. We need to see what previous data can see. If there is a previous chart where a double top pattern forms but this doesn't respect any level, so that doesn't respect any resistance or psychological level, so there is a chance it can break resistance level and go downside. So in that case, we can make entry on chart patterns. I can't say you that chart patterns and candlestick patterns are absolute bullshit. They can work together, they can work now, but you need to figure out the data also. In previous days on when these chart patterns form, we can make our entry downside without any confirmation, because there 95% chance that whenever chart patterns form, market can go that particular direction. But now we need to be very careful because there are so many big players in the market. So this is how we should trade, and if there is no resistance level, no psychological level outside there, we need to wait because whenever market let me give you an example. Let me remove the resistance. There is no resistance or psychological pattern downside. So what you need to do, whenever market breaks it, we need to wait for stop loss hunting. There is no resistance level, there is no buying level under the double top pattern. So what you need to do, whenever markets go up and hit the new fresh stop loss, the people who are enter here and their stop loss here, market hit the stop loss and go downside. This is called stop loss hunting. And if you don't know this guide, don't worry, I'm gonna make a video about this very soon. Comment down stop loss and I will make a video about stop loss hunting. So there is how we should trade in both scenarios. So let's come to the next pattern, and that is also called double bottom pattern. As you can see, there is a bottom, and this is also known as a W pattern. And same case, there is neckline there, same thing, we should trade double bottom pattern neckline. If there is a support up there, we need to wait if there is psychological level, and if there is nothing upside the pattern, we need to wait. Whenever markets break the neckline hunted the stop loss, we should make our entry there and make a target. So there's how we can trade with double top and double bottom pattern. So let me come to the next pattern, and that is called head and shoulders pattern. Left shoulder, this is called the left shoulder, this is called the right shoulder, and this is head. Oh, let me be very clear, this pattern is a bullish pattern. Double top pattern is a bearish pattern, this is a bullish pattern, and this is also a bearish pattern. So whenever this pattern form, according to technical analysis, we should make our entry downside after breaking this line. But this is same also. So there is one rule which we need to apply on every chart patterns. What it says, if there is a selling, if there is a buying level downside there, we need to wait for confirmation. We just, in simple words, we need to analyze data, we need to analyze previous data. If there is data says us the market can go down, so we can trade with that chart pattern. If data says that no, market can reverse from this situation, so we should avoid trading chart pattern. So if there is a resistance or if there is a support under the, if there is a support under the pattern, so we need to wait, and if there's nothing, we need to wait for stop loss hunting. This is called a head and shoulders pattern, and there's how we should trade. Coming to the next, this is called the inverted head and shoulders pattern. That's mean this is a bullish pattern. Actually there is a left shoulder, head and right shoulder. This is bullish pattern, and market, according to technical analysis, market should go up whenever this pattern form. And I need to tell you one thing, bullish pattern forms on resistance levels, and bearish pattern falls on support level. This is the technique, but that is no chance, that's not mean that this pattern only can form on bearish or bullish level. This can form anywhere, but there's 70% of time this pattern forms on their respected levels. This is same method after this line broken. If there is a selling level upside there, we need to wait, or if not there is a selling level, we should wait for stop loss hunting. Okay, so let's come to the next chart pattern, and that is called the triple top pattern. One top, 2, 3. This is called the triple top pattern. So absolutely same as the head and shoulder pattern, same as the double top double bottom pattern. So we don't need to describe this anymore. The same actually this is the same method. We should trade chart patterns and candlestick pattern applying only one rule, and that is data analysis. We need to analyze previous data. What can tell us? Candlestick pattern can be right, can be wrong. It is not, I'm not telling you nowadays chart candlestick pattern and chart pattern is completely bullshit. This can work, so we need to figure out that how. This is also called the triple bottom pattern, and absolutely same. This is a bearish candlestick chart patterns, and this is a bullish chart pattern. Sorry for my conversation, so if you can't understand something, please sorry me, because I'm trying to improve my conversation skill day by day. So please sorry me if I get stuck any of there in the video, and please avoid the background noise. So this is known as the flag pattern, and this pattern has more than 70% chance to hit from, because when I started trading, I see 7 out of 10 times I see this pattern goes exactly the same way. This is the bullish pattern, and whenever price forms like that, price goes like that, like I'm telling him, and forming like that. So this is flag pattern, you can see the exact, and price go up. So need to wait for confirmation. If there is a strong resistance level up there, and whenever price breaks it, you make a trade, your stop loss can hit. So what should you to do? You need to retracement. You can trade a retracement here, sell side, or after the break it sustains ups, then you can trade on retracement. And if there's nothing on side upside, so you can trade directly, because this pattern has an accuracy. Please sorry for the background noise. And this pattern has the accuracy, you can directly enter, but I prefer you should enter after stop loss hunting. This is flag pattern, and this is bullish pattern, and this is inverted flag pattern, and this is a bearish flag pattern. Sorry, this pattern calls as bearish flag pattern, and this is, you need to trade same like that. Price come like that, and this is how the bearish flag patterns form. So this is the some of the famous chart patterns you should trade the way I tell you. Now let's come to the candlestick pattern. Okay, this candlestick pattern is known as the hammer candlestick pattern, and this is a bullish candlestick pattern. So this candlestick pattern can only form in a support area, and whenever this candlestick pattern form, that's mean market can go up. So let's assume market comes like this, and here at a support, this hammer pattern form, there's a high chance market can go up like that. So after seeing a very big hammer pattern, 90% of retailers make their entry on the next candle upside, and their stop loss get it because they don't analyze the previous data. So if market is clearly trendy, market come down very long way, market is clearly trendy and a hammer pattern form, there is no chance that market can reverse. I mean, there is very less chance market can reverse from the situation because the trend is down. So we need to analyze previous data. Here we analyze that the trend is down, so we need to wait before entering on any bullish pattern. And if the trend is up, let's assume if the trend is up and there is a resistance level, market breaks down, sustains, here's a beautiful hammer pattern form. So there is a high chance market can go up. Here's exactly I can tell you that in the patterns. Let's come to the pattern. So let's assume here the price breaks up. Here the price breaks up, please ignore the red line. Price breaks up and there is a resistance level upside. There is a resistance level. So price breaks down, so resistance sustains, and here a candlestick pattern form. So you can trade. So both my chart pattern theory and candlestick pattern theory match. So this is how you should trade candlestick pattern. Same in the case of candlestick pattern, in the case of charts pattern, same, you need to analyze the data, what previous data can tell us. We need to take confirmation. Don't directly jump. If you see a pattern forms, don't directly jump into it. Analyze the data, make a confirmation. Let me be very clear what happens. Let me erase it. Yes, and this is known as the inverted hammer pattern, and this is a bearish candlestick pattern, and this pattern forms mostly on resistance level. This pattern form only mostly on support level. This pattern form mostly on resistance levels, and that indicates our downside. That indicates a bearish momentum. So market is going up and our inverted pattern form. That's mean market can, please ignore the drawing, I just wanted to understand you, just wanted to teach you. So market can go down if this pattern forms. So this is the technical analysis theory. What you need to do, we need to wait for the confirmation, same as well as the hammer pattern. So I don't describe it anymore. Reverse it and watch how the hammer pattern, I tell how to trade on hammer pattern, the exact way you should trade on inverted hammer pattern. Next I can, okay, oh sorry, where is gone? Hi, this pattern is known as the Marobozu. If you are a beginner trader, I should tell you that you should avoid trading on this pattern, because this is the candlestick pattern where the big players enter. You can see there is no wick here, only body, and to form this candle, the big players spend at least more than 100 crore rupees in the market, because this is the only candle where big players form, and this is the candle. After that candle, market can move a rally very upside, but as well as this can reverse it. So what do we need to do? We need to focus on the next candle after the Marobozu candle form. So if there is a big Marobozu candle form on a buying level, like a bullish Marobozu candle form on a buying level, we need to figure out the next candle. If a next candle form as well as a good green candle, so we can make our entry up. But if the next candle reverses, so we should wait for another confirmation. So let's same as well if the Marobozu can bullish bearish Marobozu candle forms on the resistance level. This candle is known as Doji. This is an indecision candle. What I mean by indecision candle? Indecision candle is such a candle where the buyers and the sellers say they are both fighting each other. So that's mean where buyers and sellers both are in equal position. So how should we trade on that pattern? Let me remove it first. So whenever this candlestick pattern form, we need to wait. If a bullish breakout comes here, let's assume after this candle, next candle, or nothing, next candle, a candle, this can be after 5 minutes, after 20 minutes, I don't know, breaks the high of the doji candle, we need to wait for confirmation. This candle breaks, let's assume there is another big candles and this candle break. Let me clear, then you can understand. That is very well known. Breaks, so we need to wait for the confirmation. Breaks, we don't directly enter. If the next candle goes up with a good momentum, we should make our entry, and same as goes to the downside. If a bearish candle breaks the low of the doji candle, we need to wait for the confirmation. If a follow-up candle forms a good bearish candle, we should make our entry on the downside, and if none, we should wait. So this is how we should trade on candlestick patterns and chart patterns, and these are some famous candlestick patterns and chart patterns I shown to you, and this is how you should exactly trade nowadays candlestick pattern and chart pattern. So this is the exact way you should trade chart patterns and candlestick patterns. If you watch this video till the end, that's mean you are serious, because most people don't have patience to learn new concepts. Share this video with your friend who trade chart patterns and candlestick pattern, and subscribe my channel for more valuable concepts about trading and self-improvement. With that being said, I will see you in the next one. Till then, stay tuned.